Guys, I'm Mack. Welcome back to Trading Guys. Today we're going to run through another weekly fundamental. Today's Friday, so we will of course miss out the rest of Friday's data and details that come out. However, we will discuss, what we've got coming later. For example, if we have CPI later, I'll discuss if the numbers come in high, what will that mean to you? If they come in low, what will that mean to you? And so on. The reason why I'm doing them on Fridays and not just waiting until the weekend is because all my staff are away off at weekends, and so we can get this edited and published in time for Monday coming. Okay, so let's move on. As you know, I run through all of these on Forex Factory. The reason for that is whenever I go to review the countries individually, it's very easy here for me to review them individually, okay? As explained before, after I've done my weekly review on here to explain to you guys, where I get most of my information is actually trading economics, okay? It's far better, you get far more information, and the information comes out far quicker than what it does on Forex Factory. I just simply don't use this for the weekly review because if I go to countries, let's have a look, or even here, sorry. Look, it's a nightmare for me to scroll through the countries and just choose the ones that I want, okay, as you can see. So that's why I use Forex Factory to do this. Now, another thing I also use, because I'm a heavily fundamentals, data, geopolitical news, events-based swing trader, I don't just draw triangles on my page and hope for the best. This is another one I use. It's called Prime Market Terminal, right? It's a phenomenal tool. It tells you here, look, USD weak bearish, neutral, weak bullish, blah, blah, blah. Now, sometimes, as I mentioned in my first video, there will be some times that this says they are weak bearish or neutral, and I will be saying that it's bullish, okay? Now, you need context for that. It's based on these guys are talking about what's happening right here and right now, which they will be correct on. And I'm talking about the bigger picture. So you have the, let me just show you here. You have market cycles, right? So markets go in cycles like this. Okay, boom, and then bust, right? That's how it goes, and it will just cycle back up again. So when I'm saying, or I'm bullish on something, it's because I'm thinking about, 3, 6, 9, 12 months. I'm talking about this, okay? When they're saying they're bearish on something, if they weren't in alignment, they're talking about this. Okay? They're talking about the here and now, and I'm talking about the overall. So when they're talking about something is bearish now, which goes against potentially what I'm saying, is that they might be day traders or scalpers, and they're talking about, right, what can we grab from the market right now? Whereas I'm talking about it's bullish overall. Now, what I'm waiting for is I'm not trading this as a swing trader. I'm waiting for this to come down on its bearish path, reach an area of value, then I'm entering here, and then away we go, and I'm taking it bullish, okay? So context is very important. Now, what you want to do is, as we're going through the fundamentals, this is how I decide what pairs I'm going to look at, okay? So I trade absolutely everything. You'll see many of these gurus online and they'll say, just stick with 2 pairs. Well, why would you stick with only 2 pairs when there's a whole world out there? If you can trade one thing, you can trade everything, right? So, but how do you decide? Nobody wants to sit and look through 50 different pairs at the weekend, and then things will start getting confusing, your judgment will get clouded, your mind will be too busy, and then you're going to miss trades, right? I've been there, I've done that. So this is what I do to help me choose my pairs, okay? So what you're going to do is take out your notepad and pen, write strong here. I'm just doing S because obviously I need to write large for you to see it, okay? So S for strong, then put W for weak, and then N for neutral, okay? I'm going to draw that on your page. Now what we're going to do is, as we go through the fundamentals, you will mark down underneath each of these which ones are strong, which ones are weak, and which ones are neutral, okay? Now at the end of that, what you do is, whatever is in the neutral, you ignore it, you score it out. You then pair up a strong economy with a weak economy. Why? Because that will give you a trend. That will either give you an uptrend or it will give you a downtrend. Can you trade a weak against a neutral? Absolutely, but you're just going to get this horrible, messy range. Some people like trading ranges. There's nothing wrong with that. That's fine, but I'm just telling you why I don't do it. I don't bother. I always look for the trend. And strong against neutral, as again, it's going to give you the same thing. I don't ever trade a weak against weak, strong against strong, and so on, okay? All I trade is I select whatever currency / country is under here, USD, JPY, whatever, against a weak one, okay? And that's what gives you your pairs that you're then going to look at, okay? It's very easy. You might get 4 or 5 pairs out of that, so you don't have to look at all 50 pairs, you know, whatever it is you're trading. You just simply look at the ones that line up with a strong and a weak pair, okay? It's very simple. So now we'll move on. Now, I know a lot of people, you'll see loads of gurus online, they'll be drawing, you know, the Burj Khalifa on their page. Oh, if this candle breaks the Burj Khalifa, I'm going to enter a trade. If it breaks my triangle, I'm going to enter a trade. Now, I'm not hating on technical analysis. It is extremely important. I use it myself. Everyone uses it. However, it's not a reason for you to take a trade, okay? If you're on GJ, let's just use a wild example here. Let's say you're on GJ, and it's ranging, you know, it's giving you this pattern, and you go like that, and you draw a triangle on your page, and the next minute a candle breaks the triangle. That's not a reason to be taking a trade on GJ, okay? It can be a reason for entering at a specific point, absolutely, but it can't be a reason for why you've taken the trade. A reason to take the trade is if you, let's say we go on here, right, and we look at GBP. And you look at manufacturing. Manufacturing is above 50, bullish. Services above 50, bullish. Average earnings up. Credit card spending up. Employment up. Unemployment down. So you're thinking happy days. You know, you've got all these other things added onto that. Right, the pound is strong. So you're going to put that over on your imaginary left side. Pound is strong. Then you look at Japanese yen, and it's average earnings down. Employment down. Unemployment up. Credit card spending down. Manufacturing down, tool manufacturing, whatever it is they've got on there, they always have it in Japan, down. Trade balance, minus, it's in a deficit. Okay, so all these things, you're now saying to yourself, Japanese yen is weak. So if you then put them together, the whole point in trading is to select the best trade which offers the potential, okay, because nothing is guaranteed, but the potential for the lowest risk with the highest probable return, okay? Probable, not guaranteed. So that would be buying GJ, okay? If you were to reverse that and you started to put a sell on GJ, you are now doing the complete opposite of what you're supposed to do when you're trading. You're now choosing to choose a trade which has the highest probability of risk of you losing the trade with the lowest probability of a return. Why would you do that? It's absolutely insane. And to wrap up, this is how all the big institutions do it. They base it on cold, hard data. Ask yourself this question. If you were working in a large company and you had a $2 billion account that you were in charge of, would you be happy and confident enough to draw a triangle on your page, and the minute a candle broke that, you'd be happy to drop $400 million into that trade? Of course, the answer is absolutely not. So then the next question becomes, why are you doing it with a £1,000 account, a £5,000 account? It's the same trade. So if you wouldn't do it there, then why are you doing it there? Why are you doing it at home, you know? So this is why we cover fundamentals, okay? I was someone that every time I looked at this, my brains melted pretty much every time, okay? Until I finally bit the bullet and I got a mentor. I paid for a mentor ages ago, years ago. And it was the best thing I ever done, okay? I was making money before I learnt fundamentals, and I always kind of had this wrong attitude of, well, if I'm already making money, why do I need to bother learning it? It was a stupid attitude in my younger years, and I then realised that knowledge is power, right? So let's move on. What I do now is I come up here and I go through each economy / currency one by one, apart from AUD, China, and NZD, okay? It's because they're all closely correlated. If China does well, AUD will do well. It's called positive correlation. If China does bad, AUD will do bad, okay? Now, AUD and USD are what's known as negative correlation. So if USD does well, USD in general will be doing bad. If USD is doing well, AUD will do bad. So they move in polar opposites in general, okay? Some things might affect that geopolitically, but in general, that's how it works. So, sorry, let's have a look here. Is that this week? Yes, it is. Okay, so what news have we got? NZD bullish. Now you can see this has dropped from 50.9 to 50.6. Yes, it's a drop. However, just remember when it comes to services and manufacturing, Anything above 50 is bullish, anything below 50 is bearish, okay? So yes, it means things have gotten a little bit, things have dropped a little, things have got a little bit worse. However, it's still above 50, so it is still bullish for the currency, okay? FPI month on month has dropped, bearish. China, bearish, 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 bearish. Westpac consumer, bullish. That's AUD is bullish. GDP price, NZD bullish. NZD, PPI bullish. PPI output bullish. AUD, sticky. Wage price index is sticky, so it's not better, not worse. Inflation expectations up, so it's bullish. China, same. AUD employment change has dropped, so that's bearish. It's dropped quite a lot. You have to think, sometimes you have to think, is there a reason for that? Is it, for example, if this was in January, right, and you saw this drop, you would think, oh God, that's a lot, but it's actually quite normal because there's a lot of these excess jobs that are just Christmas period jobs, okay? So you then expect January, February, there to be a large drop in employment, okay? Because loads of people have just worked Christmas type jobs and they're only temporary, okay? But it's not that, so yeah, I don't know why that is, it must just be bad. And unemployment rate has increased, okay? So that's bearish. So there's a bit of mixed data there. For the AUD, you're not always going to get a perfect scenario where it's like bullish, 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 bearish, 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 and then you're like, oh my God, you know, this is Christmas. Sometimes you do get mixed data and you feel a bit confused thinking, well, if that's up and that's down, what does that mean? It's just simply mixed data, okay? And you need to wait for a bit of clarity coming up later on. Trade balance, NZD, is massively minus. It's hugely dropped. Now, when it comes to trade balance of a country, you get a deficit, which is this, the minus 1949, and then you get a surplus, okay, which would be in green and it would be a positive. So basically, all that means is it's like the trade balance is a country's current account, okay. That's the easiest way to look at it. Now, if it's in a deficit, what does that mean? How does it even get there? Well, it means the government could be spending too much. They are importing more than they're exporting, i.e. they're buying far more stuff than they're selling. So if you're buying more than you're selling, then you're spending the money more than you're making from import, okay? And that's how this type of thing happens. If it's the other way around and it's positive, it means you're exporting more stuff, i.e. you're making more money from people around the world and you're importing less, so your current account can build up. It's very, very simple. AUD flash manufacturing PMI is 52, strong bullish. AUD flash services PMI 52.9, strong bullish. Yes, it has dropped from previously 53.6. However, it's above 50, so it's bullish, okay? Credit card spending year on year in New Zealand has increased from 3.2 to 5.3%. That is fantastic. Why do we care about credit card spending? It's very simple. The more people are spending on the credit cards, it means they're buying more stuff from the shops, right? Could be jet skis, could be clothes, could be taking their missus out for a meal. They're spending more money on credit cards. When you're doing that, you're stimulating the economy and therefore it's a good thing, okay? So moving on, I would say from this, now what you want to do is, I would come back here, underneath strong, I'm going to put AUD. Okay, I'm going to put NZD. And of course, for China, we don't trade Chinese currency, so we just leave that out. We just like to see it, because if manufacturing production is going up in China, then you know in your mind that Aussie, the next news for Aussie, will go up as well, because they buy all their mining materials and stuff from Australia, right? It's a close trading partner, so that's why we like to look at the both. Right, moving on. Let's have a look at what we've got next week. So I always skip to next week to see what we've got coming up, okay? Next week we have got Aussie CPI month on month and year on year, and trimmed mean CPI. That's fine. What else? Retail sales quarter on quarter. We care about that. Core retail sales. Yep. Foreign direct investment. China. Private capital expenditure. Okay, so we've got a couple of things that we want. The real one that we want to focus on next week is CPI for Oz. Okay, so that's going to be a big one that we want to look out for. Okay, then we come across. We close off these. The next one is Canada. Now, for the Canadian dollar, It's important to remember that Canadian dollar is closely pegged to oil. Okay, so if oil does well, the Canadian dollar will do well in a currency sense, even if the economy is quite poor. Okay, if you're looking at the economy and you think, bloody hell, this is terrible. Why? How can it possibly be flying? I'll guarantee you, if you jump across to oil, you will see the oil prices flying. Okay, that has the knock-on effect to Canadian dollar. So sometimes you have to bear that in mind. That you can't say, oh, Canadian dollar strong. Sometimes it's not strong. It's really oil that's dragging it up, but the economy may still be weak at that point. Okay. So this week we've had CPI month on month. Okay, so that's bullish, 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 bullish. Housing starts bearish. IPPI bullish, bearish, bearish. Core retail sales, but it's month on month. So core retail sales month on month. It just means it's a poor month. It's not really something as a swing trader that we would really care about. We really care about quarterly a little bit more, and the yearly is the one that we really care about. Okay, so yeah, some decent news coming out of Canada there. But again, it's because oil price is also going up and so on. And one good week doesn't instantly change a currency to being strong. Okay, sometimes they just have a good week, but then 3 weeks before that and 3 weeks after are all terrible. Okay, that can also happen. This week coming, we've got corporate profits quarter on quarter, current account, Jackson Hole, GDP. Yeah, okay, so we don't really have a lot of news next week with the Canadian dollar that we care about. I'm going to put, where are we? Now, if you're a day trader or a scalper, you could potentially put CAD under strong for now, okay? I'm going to put it in neutral because I'm, obviously for context, I'm more of a long-term trader, right? And I really want to see how more news comes out over the weeks, if it really is a genuine shift or if it was simply just a good week that it had, okay? So I'm going to be monitoring that as a swing trader. I don't just change it right away. And we will see the truth if oil starts melting again, if Trump and Iran come to some deal and the price of oil starts dropping again. We will then see if Canadian dollar is truly strong, i.e. the economy, is it truly strong, or is it just a kind of bluff, if you like, because of oil, okay? So CHF, I don't even bother looking at CHF. I'm going to show you for the purposes of this video, but I don't bother with CHF because look, there's literally, it's a waste of time. Even when you get news, it's always just a waste of time, okay? I don't trade Swiss franc based on any data. It's always the same. It's always level pegging. Hence, you have the expression as safe as Swiss, okay? It's a safe haven. When do I trade Swiss? I trade it based upon risk sentiment, okay? So when markets are risk on, you'd kind of be looking to sell CHF, if you like. When markets are risk off, you'd be looking to buy CHF against a weaker economy, okay? There is a little bit more to that, looking at another couple of different things, but that's in general how I trade CHF, all right? So let's move on. There's never any point doing that, looking at it. Straight on to Euro, and also what I'll do is when I come to here, I always put CHF in neutral, okay? Because I just always know in my mind that I'm going to trade it based on, risk off sentiment. Okay, so now we're on this week for the Euro. Let's just fly through this because I know this video is going to drag it on a bit. Bullish, bullish, bullish. Steady, so it's bullish, steady, bullish. 10-year German bond auction, bullish. Bonds always move before the currency, so if bonds go up, then the currency gets stronger. I'll explain that in another video, why bonds make currency move and so on. Yeah, German PPI month on month is good. We've got news coming out. French flash manufacturing PMI, French flash services PMI. So look, we've got 11 seconds here until it's out. We've got 2 bits of news here, right? Let's see what we've got on trading economics. Sometimes you get far more data on trading economics. So where are we? Let's go down. Thursday. Come on, why is that not loading? There we go. Thursday. Friday. Here we go. So look, we have got more. We've got S&P Global PMI, S&P Global PMI Flash, and Global Services PMI. So we've got 3 here, and we have got 2 here. Okay. So you always get more data on trading economics. This should normally come up before Forex Factory. It could be because my internet's a bit slow in this office. Still pending, you see. So again, if this comes in, we have got France, 3 of them are for France here, okay? And then after that, we have got Germany as well. So when it comes to the euro, the ones that we actually really care about is France and Germany, okay? They're the ones that really move. If it's Italy and Spain, we don't really care about it. Yes, we do have a look, but they're not the real size enough to really push the euro anywhere. So it's taking its time here. Let's go back. Okay, we're just waiting for this to play out. But there we go. Bullish, bearish. Okay, so we've got manufacturing. French manufacturing is up. That's bullish, and services PMI is bearish. Okay, so we've got Germany. It says Germany should be coming up soon, about 2:30. Well, another 15 minutes. Okay, so we'll crack on. Anyway, this is what you're looking for. You can see this is potentially going to be mixed data, but more to the strong side. I am going to put euro in strong, okay, because it is strong at the moment. We do, however, have to keep our eye on what's happening on the Strait of Hormuz, because if it continues to get blocked off, then the Eurozone does feel that, because they're big importers, right? So the Eurozone does feel the strain on that, and it will affect it later. So we'll keep our eyes on geopolitical events and news. Let's see what we've got next week for the euro. Import prices, final GDP. We've got money supply, private loans, French consumer spending, private payrolls. We've got a fair bit of news. GDP, CPI, unemployment. So there's a fair bit of news next week, okay? Nothing major, but it is good news that we want to have a look at, and see where we stand after that, okay? Moving on to GBP. Okay, that was last week or this week. Right move, so that's bearish. Claimant count change, that's bearish. That's bullish, I'm sorry. So that's how many people are claiming. They had forecast that 16,500 people, 16,500 people, were going to be claiming benefits essentially, and it was minus 11,000, which is actually bullish because there's less people claiming, okay? Average earnings has decreased. Now, don't be fooled that that's green, okay? And think, oh, that must mean bullish. It's bearish. Look, it was previously 4.4% average earnings. Now it's 4.1%. That means people are earning less money, okay? Now, if you're earning less money than you were last month or last year, you're not going to be going out to eat as much in restaurants. You're not going to be buying yourself a couple of pairs of trainers. You're not going to be booking holidays and this, that, the other. So it brings the economy down, okay? It slows it down slightly, so it's not a good thing. The reason why that's green is that it was forecast to come in at 4.0. It's came in better than forecast. So Forex Factory has made it green, okay? Now, for people that don't understand the context here, they might just look at the colours and say, oh, that's green, it must be bullish. Oh, that's red, it must be bearish. It's not the case, all right? That's why I like doing these videos, to help people on this, because I've done that for years as well. Unemployment rate is bearish. So we've got bullish, bearish, bearish, bonds bullish, CPI bullish year on year, so that's good. That's the one we really care about. Core CPI bullish. PPI input is bearish, bullish, bullish. See, that's red. Now, if you looked at that, you'd say, oh, it's red, it must be bearish. No, it's not. Look, previously it was 3.0. Now it's increased to 3.2. However, it was forecast to come in at 3.3. So it's came in a little bit less than it was forecast. So Forex Factory has decided to make it red, okay, which is incorrect in my opinion. It should be green because it's an increase, all right? So that's bullish. HPI year on year is bearish. Consumer confidence, bullish. Retail sales, bearish. Public sector net borrowing, bearish, okay? Flash PM. So we've still got tonight, we've still, about an hour's time, we've got manufacturing PMI, services PMI. So both of them are forecast to be above 50, which is bullish, okay? When it comes to the UK, if manufacturing is less than 50, we don't really mind because the UK isn't a manufacturing country per se, okay? We're a services country. We provide banking services and investment services and so on and so forth, okay? We're not really a manufacturing country. Whereas Japan is a manufacturing country, less services, okay? And you get that throughout. Germany, manufacturing, less services. France, services, less manufacturing, okay? So different countries have different ways. So for me, I'm going to be putting pound in strong. It could be like weak bullish, okay? So I'm going to put it in strong just because I've got this here. But I mean, you could label it as weak bullish, and you could argue, debate that you might place it in neutral, okay, depending on how you view it. For me, that's my opinion. I'm going to keep it in strong just now because it hasn't really given a lot of bad data, okay, as of yet. Let's see what we've got next week. Okay, we don't really have anything next week. Okay, just the Jackson Hole symposium, so that's fine. Moving on, we've got two more pairs, guys, Japanese yen and USD, and that is us. So, Japanese yen, let me see, price index year on year, is bearish. Again, don't be fooled that it's green. It's dropped from 3.2 to 2.6. It's came in higher than forecast, that's why it's green. So, okay, that's bearish, bearish, bullish, bearish, bullish, bearish, bullish, bullish. Okay, so quite good data for the Japanese yen. However, we know that the economy is terrible. The Bank of Japan have just stepped in and intervened, right? That's why we got that big move, as if Japanese yen was strong. However, what I'm going to do is I'm going to put it in neutral, okay? Overall, the economy is still quite weak. You could argue that you put it in weak, but for now, I'm going to place it in neutral, all right? Give them the benefit of the doubt. Next week, we've got Bank of Japan core CPI year on year. We want to see that. SPPI year on year. We want to see that. Tokyo core CPI. Want to see unemployment. So next week, I don't know why these are yellow because they're quite important stuff. Next week, we do want to see that, okay? And last but by no means least, USD. Now, when it comes to USD, it is fairly bearish at the moment, okay? I'm still bullish in my mind because I'm kind of thinking outside the box. Now, let me explain this. You always have to go with the cold, hard data, okay? But it also doesn't hurt to be a little bit military about it and think, okay, you know, what's the worst that can happen and what's gonna come next? So there's a lot of bad data here pulling the US dollar down. Who have we got in charge of the US? We've got Donald Trump. Now, do you think, my chain of thought on this, and it's purely my own opinion, is do you think he's going to let the dollar absolutely collapse and take this pounding? I don't whatsoever. If you look across at oil, you'll see 1 minute it's flying, next minute it drops, next minute it's flying, next minute it drops, and it's all from him placing tweets and doing these little deals here, there, and everywhere, and it's making it move, okay? I believe he will do something similar when it gets to an area of value for us to then purchase the USD, okay? So overall, you know, in the grand scheme of things, I'm still pretty bullish on the USD. However, right here, right now, today, you will see that it is quite bearish with a bit of negative news, but I'm just anticipating Trump doing something. However, data as opposed to running with your imagination, okay? But it is good to plan ahead and think what could happen. So, USD, we have got bullish, bullish, bearish, but came in higher than anticipated. Weekly employment change, bullish. Building permits, bullish, bearish, bearish, bullish, bearish, bullish, actually. Philly Fed manufacturing, bullish. Unemployment claims, bullish. Bullish. What's this? A gas, we don't care about that. And tonight we've got manufacturing PMI and services PMI, okay, which are scheduled to be in above 50. Bullish, so that's quite strong for USD. I'm really a USD bull, to be honest. But of course, everything needs its market cycle, like I explained, right? Let's see what we've got next week. Okay, here we go. Next week we have, I don't know why there's nothing on Monday, maybe it's a holiday, I don't know. But next week we've got unemployment change, we've got quite a lot, core PCE, prelim GDP, core durable goods orders, yeah, okay. We've got a fair amount next week that we want to see. Fed Chairman Walsh speaks, so you want to listen to that speech if you can, and you want to see if is he dovish or hawkish, okay? Prelim benchmarks, payrolls, okay, that's fine. So we do have a lot that we want to see. If you're confused, like what does this mean, you know, durable goods orders, then you can just come across here and click on the folder. The folder will tell you right here, measures, usual effect, actual is greater than forecast for the currency, why traders care, okay, it tells you a lot about it. I do have a complete course where I explain every single thing. It's about 32 videos in total if you're a complete beginner. If you're someone who's already into trading but you just want to learn the last part, it's about 20 videos there for you that you can go through. Each video is about 2 to 3 minutes long, so it's not a death by PowerPoint video. If you want my course, I will give you it for free. It's got everything from fundamentals, how to use banking data and things like this. Banking trades, we have got, it's just taking ages to load up. These are the trades that the banks are in, so this actually tells you what the banks are trading right now and you can copy their trades. Retail traders, here we go, this is a phenomenal tool. Let's just have a look at pound AUD. This gives you loads of information. It tells you what retail traders are in. It's called DMX, which means Dumb Money Index. Retailers are just always wrong. They are the liquidity for the banks. Down here, we have got the overview. Okay, so you've got news coming up here, retail headline ticker. Here you've got technical charts. Then move across, you've got a smart bias. It will give you a report here. So look, overall, pound is weak bullish and AUD is weak bullish, and it gives you a full report of what they're essentially looking for. The outlook in the short term and in the long term, okay, on both pairs. Then you come across here COT, GBP. So COT means commitment of traders, okay? It's basically all these massive institutions, when they have to submit, I think it's every Tuesday, don't quote me on the day, but I think it's every Tuesday, they have to submit all the positions that they're in, and that then gets checked, and then every Thursday or Friday, that information gets released to the public. Now, you can go and find that online. However, when you look at it, your brain will just melt because it's kind of like the Matrix, it's a bit fried, the way that they post that. However, platforms like this compile all that information and they turn it into digestible data that you can just look at and read. So look, how easy is that? You know that their positioning is mostly long in the GBP, okay? And you can see each week if they've added to long positions or taken away from long positions, okay? That's a good indicator that they're going to be even more bullish. It's went from minus 7,000 to plus 452. That's a good indicator that things are going to start pushing bullish for GBP, okay? COT, AUD, it's exactly the same thing. And this is also more bullish, okay? So you wouldn't really trade bullish against bullish. Seasonality. So what seasonality does is it takes all the data from the last 5, 10, and 15 years, and it tells you seasonally, if I just go here, make that large, what we are due to see here. So it says seasonally, over the data over the last 5, 10, and 15 years, September, we're looking at GBP AUD is likely to be bearish, okay? Doesn't mean you can just trade by that, but it's a good indicator. And then we have retail sentiment. It tells you here what retailers are in. So retailers are in buys GBP AUD, okay? Now, if one was strong and one was weak, let's say pound was weak and AUD was strong, and you come across here and you see all the retailers are in buys, that's another fantastic signal for you, or confluence, that you should be in sells, okay? Because they're always wrong and they end up always becoming the liquidity. And then we've got the last part, central bank pricing. You don't really need to bother with this, it will just confuse people, but it's for rate hikes or hold, okay? So it's a phenomenal tool. I love using it. If you want 7 days free trial, I can get you that. I know the owner, he's a good guy. So basically, yeah, if you would like my free trading course to explain all of these things in great detail in 2 to 3 minute videos so that they're easy to digest, let me know and I will give you my course for free, okay? There we go. So what are we on there? USD. I'm going to put USD for now in neutral, okay? So we don't really have any weak right now. We could put Japanese yen in there, but let's just have a look at what they've got here. Prime market terminal. Okay, so let's just go to... Okay. So that's this week, okay? That's not... We've just predicted next week. And unfortunately, they refresh this every Monday. Okay, so that is going to be different next Monday. So for now, they've got week bearish, neutral, week bullish, week bullish, week bullish, neutral, Japanese yen week bearish, and CHF week bearish. That's definitely going to change because we're now in risk on sentiment. Okay, so that should change, and we'll see what happens. So yeah, you should have this as a summary. This is actually odd that I don't have anything in week. You could probably put Japanese yen in there, but it's fine. So we've got strong AUD, NZD, Euro, GBP, CAD, neutral, CAD, CHF, Japanese yen, and USD, okay, for next week. So, yeah, I hope these videos are beneficial for you. I'm Mack. This is the Trading Guys, and I'll see you next week.